Hi, today is Monday the 26th and this is the weekly recap for our current trades. Here is May. Last week I did virtually nothing on this trade. If you look at the trade log, I basically completed my risk reversal by setting a PCS here on 3600, 3625. I rolled one call credit spread here, had done one already before. So it was a very soft measure. I'm trying to buy time because I know very well that the vol skew here, the IV trough on May, I mean, as we see now, we are around here. This is the bottom of the IV skew. This skew will go naturally left if the market stays stable. Of course, if the market goes down, we'll be out of trouble. But this is not that unless the market really shoots up rapidly, then we would be on the wrong side of the trough. But if it just grinds another 25, even maybe 50 points, it should still be okay. So I'm trying to buy time. Now we are in a descent phase where generally the IV skew move faster towards the money, but of course if the money goes up, it's going to be troublesome. So this is what it is like now. Not great, and also now if I have to do another risk reversal, this third little premium here, I will probably have to go one further up for, as you can see, just 40 cents. And if nothing happens, it will be time to close these lower PCS. So it might be something like this. It's not going to be a great month anyway, so I would lose a little bit, reduce capital. So of course if I just buy another PCS to pay partly for it, I could do something like this. I would reduce by 5k, I wouldn't lose too much here. So that's something I could do, but if on top of that I have to roll the CCS, it's going to be really disappointing. So that's more or less what I have in mind. Combos are way too low to contribute to the trade, and I was actually thinking of dropping some of the lower combos and putting another maybe 75/50 broken butterflies in this area, maybe the shorts on 36.25. So that would be, maybe if I delete this, I would of course have to reduce, but maybe if I do something like this, moving the main combo around this area. This one costs nothing, so that it will also not contribute to lift the upper expression line. So this is really difficult. Vol is low, the market has moved far away from my combos, so basically the rest of the performance definitely lies on the call credit spread side. As you can see, I've got two, they are valued about $1, so I've got about $200 here. So as you can see, if I'm around 160, 180, that will be 380. So it's really like 2/3 of the profit I'm looking at right now. So there's maybe 1/3 of the profit still to be gained from the put side and mostly on the call side. So I'm hoping I don't have to roll them. And of course with earnings coming, anything can happen. I am betting the market will maybe be a little bit agitated, but eventually will come down, but maybe I'm wrong. And if I have to roll, I will have to roll. As you can see now, it's $1.105. So I mean, I almost regret I didn't close one when the market went down last week. I mean, at the bottom of this trading range, those call credit spreads were at 70 cents. I should actually have rolled them at the time. Really, I'm buying time, so I'm a bit on the defensive, and I should have been more proactive. But I mean, that's okay. Now, on the June, and the problem with June is that we are maxed out on capital right now. So this trade is not doing badly, but it's not producing much. The upper expression line is 158. I need to add more, and this one still has some value. I can still act there, even though the volatility is down. So I would probably add further broken butterflies around here, maybe centered on 3800. I could probably add one more here. This one costs next to nothing, about 10 cents. and I could also go for something a little bit more aggressive. I mean, lowering the wing sizes, but what is down but not so much, 53 DTE, is not really far down the life of the trade. So there's no really a necessity to go narrower. If I would go narrow, it would be maybe something like, as I said, a 50/7, a 75/50, like this. That would raise the upper expression line. As a matter of fact, my delta would still be okay. That's something I could do. And since I probably have some slack, some space here to add another combo before reducing May, I could do this today. It's slightly more aggressive, but at the same time the risk level is minimal. So really not much to say on this one. I'm just hoping the market will stabilize around 41.80. It may go to 42.20, but I suspect the market will eventually go down. As you can see, unlike previous month, I actually haven't loaded up too much on the call side. I started early, and definitely too early. I sold them for 1.3 and now it's 1.8, so I'm losing on the call side, but I haven't really rebalanced my Vegas risk. Generally by this time, either I go Iron Condor style, or at least I try and move some of the Vega risk on the upside. The SPX VIX correlation is good, so maybe it's a good time to sell another one. If we go back to what I showed just now, the IV skew, it's starting to, I mean, it's a little bit on the aggressive side. I mean, I am here, so it's not great. So maybe I should put another call credit spread slightly higher to be on the safer side. I don't feel there's a need to roll the existing one, but yes, I should maybe transfer some of the risk on the upside. But I will be very prudent over the next few days. I'm really waiting for earnings to show up and see where the market is going. Okay, that is it for now. Later, I will post updates on Slack over the next few days. Even if I don't do much waiting for earnings, I will post several updates, at least twice a day on Slack. Thank you for watching, and bye for now.